somebody shorted the oil market today by hundreds of millions of dollars exactly 20 minutes before Trump made his announcement that everything was going to be great.
For decades, the world has operated on the illusion of a stable energy market. But if you look closely at the data, the cracks are widening. We aren't just facing a supply issue. We are witnessing a coordinated shift in how energy and power are traded on the global stage. Right now, as military tensions escalate across the Middle East and Eastern Europe, the oil markets are reacting in ways that most retail investors don't see until it's too late. There is a pattern emerging that should alarm every American. Time and time again, we see massive, multi-billion-dollar positions being opened in oil futures just hours or days before a major geopolitical announcement hits the wires. Whether it's a sudden shift in sanctions, a new military escalation, or a major presidential directive regarding domestic drilling, the smart money always seems to know which way the wind is blowing before the public is informed. This isn't just market volatility, it's the sign of a system being front-run by those who anticipate every move from the Oval Office. As the conflict in the Middle East moves closer to the critical choke points of the Persian Gulf, the stakes have never been higher. The Strategic Petroleum Reserve is at a historic low, leaving the United States without its traditional shield against price volatility. While the public is told that everything is under control, the insiders are already betting on a massive disruption. They are positioning themselves for a world where $100 or even $150 a barrel becomes the new reality, knowing that the current administration's drill baby drill rhetoric and foreign policy shifts will create massive winners and losers in the blink of an eye. When you combine a depleted national reserve with a hot war in the world's most sensitive oil-producing regions, you get a recipe for a shock that will paralyze the American economy. The big players are already moving their chips. They know that the next major policy shift, the one that will send gas prices through the roof, is often just one signature away. The oil shock isn't just a future threat. For those watching the massive positions being taken behind the scenes, the fuse has already been lit. You are being told one story at the pump, but the trade volume is telling a completely different and far more dangerous tale. But if you look at the charts, you'll notice a pattern that the mainstream media ignores. Every time the administration prepares to announce a major shift, whether it's a new round of sanctions, the seizure of an Iranian tanker, or a sudden change in the blockade status, the market moves first. We are seeing massive, high-volume positions being opened hours before the official news hits the wires. This isn't just volatility, it's the result of inside information being leveraged at the highest levels. While the public waits for a press conference, the smart money has already placed its bets, front-running the very policies that are driving gas prices to record highs. The reality on the ground is even more dangerous. As of April 2026, the war in Iran has transformed from a localized conflict into a global energy chokehold. With the Strait of Hormuz effectively closed to nearly all traffic, 20% of the world's oil supply is trapped. This has created a terrifying disconnect between paper oil and physical oil. While futures might be trading at one price, the actual cost to secure a physical barrel for immediate delivery has skyrocketed toward $150. The world is scrambling for a shrinking pool of supply, and for the first time in decades, the United States is fighting a war without its traditional energy shield. The Strategic Petroleum Reserve, which was meant to be our last line of defense, remains dangerously low. We are heading into the peak of this military escalation with an empty tank. Every time a new tactical strike is announced or a cargo ship is seized in the Gulf, the insiders who saw the move coming make a fortune, while the average American is left to deal with the fallout at the pump. This isn't a theory, it's a massive wealth transfer happening in real time. The oil shock isn't coming, it's being engineered, and those who have the inside track are the only ones positioned to survive the crash. As the conflict deepens and the supply chain fractures further, the leverage is shifting away from the dollar and toward the physical commodity itself. If you aren't watching the trade volume before the headlines, you're missing the true story of how this crisis is being played. The countdown to a total domestic energy freeze has already begun, and by the time the next major announcement is made, the most profitable moves will have already been made by those who knew what was coming. This is where the theoretical meets the tactical. As we stand in April 2026, the Iran war isn't just a headline. It's a systematic dismantling of the global energy order. With the Strait of Hormuz effectively blockaded since March, 20% of the world's oil and LNG supply is currently stranded. But while the public watches the military maneuvers, the real action is happening on the trading floors of Chicago and New York. Notice the pattern. Just days ago, before the administration announced the indefinite ceasefire extension, the options market saw a massive, quiet surge in downside protection. While retail investors were panic buying at the top, institutional money was already betting on a temporary cooling of the rhetoric. This happens every time. Before every major move from the Trump administration, whether it's a new maritime strike or a shift in the blockade status, the volume spikes. Someone, somewhere is front-running the headlines, positioning their chips before the president even steps behind the podium. The leverage has completely shifted. In the 1970s, the US had a massive domestic cushion. Today, our strategic petroleum reserve is hovering at a dangerous 405 million barrels, hardly enough to sustain a prolonged engagement in the Gulf. We are entering the May 1st War Powers Resolution deadline with a half-empty tank and a market that is being traded on inside information. The smart money isn't looking at the ceasefire as a sign of peace. They see it as a brief window to reorganize before the next leg up. The disconnect is staggering. You're being told that the situation is stabilizing, yet Brent crude remains stubbornly above $100, and physical barrels are commanding a massive premium over paper futures. The insiders know that without a functional Strait of Hormuz, the American economy is essentially on life support. They aren't just betting on oil prices, they are betting on the inevitability of the shock. By the time the next surprise military escalation or policy reversal is announced, the positions will already be locked in, the profits will be made, and you will be the one left paying the bill at the pump. The fuse has been lit, and those who know the schedule are already walking away from the blast zone. The real danger isn't just the price at the pump, it's the total loss of transparency. When the world's most critical commodity is traded based on backroom deals and military maneuvers that only a few people see coming, the free market ceases to exist. We are moving into an era of energy feudalism, where those with the inside track on policy shifts and naval blockades accumulate generational wealth, while the rest of the country watches their purchasing power evaporate. History shows that every major economic reset is preceded by an energy shock. The patterns we are seeing today in the Gulf, combined with the strategic depletion of our reserves and the calculated movements in the futures markets, suggest that we are on the doorstep of the largest wealth transfer in American history. The insiders have already placed their bets. They aren't waiting for the news to break. They are the ones making the news. The question is no longer whether the shock will hit, but how much more of the script is already written. As the deadline for the next military escalation approaches, watch the trade volume, not the televised speeches. The truth isn't in the press releases. It's in the positions being taken before the cameras even start rolling. The oil shock is here, the trap is set, and for those who aren't paying attention, the cost will be everything. The age of cheap, predictable energy is dead. Welcome to the new reality.